This conference will now be recorded.
Good afternoon, everybody. This is Greg Morton. It is Sunday, March 19th, 2023. Sorry, I did my slides yesterday. This is the weekend video update for the Greenville Eastside IBD Meetup Group as well as the Stockyard Meetup Group. As always, this is for educational purposes only, not recommending any stocks or securities to buy or sell, and all investing has substantial risk of big losses. So we will make sure we learn first and only then invest. So today we'll look at the M factor. So 2 weeks ago, I said, welcome to the roller coaster. Last weekend, I said, welcome to the train wreck. And this weekend, it's sort of welcome to the bank robbery and bank contagion. We'll talk about current action plan thoughts and look at 3 different time frames with that. We'll do some chart review. And then our next monthly meeting will be Wednesday, April 12th, 2023. So that's the big monthly educational meeting. So let's look at the M in Canslim. This is the most important letter per O'Neill. Being right on this is 50% of the battle. We want to diagnose or interpret. We don't want to predict. And we look at 3 things. Actions of leading stocks. These are strong Canslim stocks fundamentally and technically. There's about 4 of these right now. We'll look at those 4. And even if you miss them and they have not presented an opportunity to get in at a subsequent correct point, we still get clues on the M from watching them. Actions of stocks owned in the group teaching portfolio, we sort of have pretty much next to nothing on the long side still. Market pulse, distribution day count, really everything that I combined into the coloring book. So bottom line, it has been and still is a tough market recently, at least as of the close, 4 p.m. last Friday. Breakouts and gaps in Canslim stocks since the follow-through day on January 6th have really struggled. I have 48 proper breakouts and our early entries, and the vast majority of those stopped out or are struggling to get traction. We actually went through that list as part of our meeting this past week. So 2 weeks ago, this was the cover slide. There were a lot of questions, cover slide in the weekend review. Those questions got answered and not in a positive fashion. So that led to last weekend's cover slide, which was back to a train wreck after a very difficult week. So let's jump in and see what was making me make that decision. Oops, I lost MarketSmith. So here's the NASDAQ. The daily chart, and of course we had a high volume sell-off. We had some up days on lower volume. The NASDAQ is the best looking of the indexes now. It's back above all the moving average lines. So it's actually doing better than anything else. And it seems like some of that's being driven by a rotation by the mutual funds into big tech growth, Amazon, Meta, Microsoft, Google maybe. And maybe that's just a place to park money since they have a mandate to stay 95% plus invested, or maybe even more. S&P 500, this looks bad. Under all 4 moving average lines, 21 and the 10 have crossed over the 50. So struggling to even get back above the 200-day. NYSE looks even worse, well into the 200-day under all 4. Dow, same thing. Russell, same thing. And oops, went one too far. S&P 600, same thing. So we're really seeing weakness on almost everything, with the NASDAQ trying to hang in there a little bit. And we'll see that in the coloring book when we look at it. So just looking at Friday, which was a distribution and a selling day, I currently have 6 buying days and 12 selling days in the 25-day window, going back to the orange dot. So that just starts me off at thinking it's a distribution dominant tape more than accumulation dominant tape. The NASDAQ did actually flip back to green on the MMTS this week. It's the only index that has done that. Still, we have 5 distribution days. We had a rally day back here on the 13th. On the S&P 500, we had a rally day on the 14th. Had distribution on Friday, and we have clustering distribution, which is 4 in the last 7 trading days. Clustering is defined as 4 and 8. So we actually have 4 and 7. So that's like distribution on steroids. Just something else to be aware of. The Dow's even worse. We had a rally day here. It failed in one day, and we had distribution, and it has clustering 5 of 7. So that sort of confirms, the Dow was leading previously, and now it is the most lagging, I guess. Market school exposure is at 0. The window of opportunity did open back up, so could be waiting or tiptoeing in a little bit, but there sure is a lot of weakness out there. And then Friday, downside reversals. That's not constructive. Had distribution with clustering on 2 indexes. And of course, we had quadruple witching. So that is very high volume, which all comes in right at the end of the day and help drive all these distribution days that we just looked at. So really just looking at it objectively, a lot of weakness in everything that the color and book tracks. Group teaching portfolio, 2 small partial positions on the long side. We're only 16.8% invested, and part of that's on the long side, part of it's on the short side. I got to redo that math. Sorry, got something off there. And portfolio heat is about 4.91% overall if everything stopped out. So again, just not much long in there at all, and down 3.32% year to date. So let's go back over here, mention that. So we're in March Madness. Requires us to look at our tournament brackets, and I'm looking at the FDIC tournament, which is a little bit different. So here's the little bracket I made. We started with Silvergate Bank. We actually add players and teams in the FDIC March Madness bracket. So we started with Silvergate. That was Tuesday, March 6, 2023 was the big plunge on that. And then on Friday, Silicon Valley Bank was taken over by the feds. And then that Sunday, so these are both within 48 hours of each other, Signature Bank of New York was shut down and taken over by the feds. And then we currently, the next 2 in focus are Credit Suisse as well as First Republic. And there'll be some other names behind this, the way things are going. So in my opinion, these bank failures are a big deal. Silvergate we had, that one I mentioned. So Silvergate, this was the first bank failure since 2008. So that was 15 years ago. I'm sorry, Silicon Valley Bank was the first bank failure. Silvergate's still trading at a very low price. So Silicon Valley was the first one, and this was the second largest ever. And that was due in part to them investing in long-term mortgage-backed securities, which is where a lot of the problems came from in 2008. Then you had Signature Bank of New York on a Sunday. Again, now you got Credit Suisse and First Republic are in the crosshairs. This week, Credit Suisse got a $54 billion loan from the Swiss government, or the Bank of Switzerland, one of those. I have no idea what the monthly payment is on that, but it's got to be pretty high. And then First Republic got $30 billion in support in deposits/transfers from other banks, and neither one of these massive events had any lasting impact upon the stock price. They both popped a little bit after market close on this news, or if it was during the market, then on the news maybe for First Republic, and then the bleeding just resumed, or the flatlining resumed, whichever way you want to look at it. So I think this drives massive uncertainty. Uncertainty always drives volatility in the market. The market hates it, and it struggles until the uncertainty is clarified, and then it can be priced in. So to me, this is a very big issue on the banks with multiple potential ripple implications. And again, there's other banks already being discussed. And this sort of thing, problem of this magnitude, it doesn't get solved, it doesn't get priced in a week or two, historically, is my thinking on the topic. So we got the Fed meeting also coming up this week, most critical one in a long time. Do these bank failures make the Fed pivot? Or if the Fed does pivot, does that cause more panic because everybody goes, the bank situation's more critical, more serious than we all thought? So neither fork of this road is attractive. Kind of want to just lay down at the tree in the fork and take a nap while all this goes over. So current market sign for me is Mr. Pickle. I'm going with this week because I think that's where Powell is. Wednesday press conference is just going to be so key in what he says and what he says about rates. And even if the banking contagion makes them back off, they are so hawkish on getting inflation down, even if they raise it to 3% as their target. They're just very hawkish. And even if they pause in doing something with rates, if they don't see inflation come down, it seems like they're going to be right back on the gas pedal on raising rates. So let's talk about the M outlook in light of all of that over 3 different time frames. Short term means the week coming up, basically. Intermediate, I don't know, a month or two, going a little further out. And then long term, going even further out. So short term, I think it's still sort of a buzzsaw market with 2 big walls of worry. We've got a hawkish Fed with high inflation. Remember the last time Powell spoke at length in his testimony, he basically said, we're going further faster. And this really roiled the markets because the markets had just priced in 2 more quarter point hikes at best. And then short term, we have the bank contagion. So this is the second big wall of worry. I saw in the news this weekend, the regional banks are now saying, all of them, not just First Republic, are saying they want an unlimited 2-year FDIC guarantee on all deposits. So normally it's supposed to be $250,000 per account or $500,000 on a joint account for the FDIC insurance. And now the banks are saying, hey, we need this 2-year unlimited guarantee. And what does that tell you? Again, longer term problem. It's 2 years before depositors they think are going to feel comfortable with going back to the $250,000 limit. So that's, again, just a reading of how serious it is. Intermediate, I'm really the same as the short term. Plus, I think there's a potential third wall of worry. We're seeing some early bricks being laid in, and that's international conflicts and saber rattling. We got U.S. versus Russia with that attack on our drone over international waters. And we got US versus China. So that one China Twitter account, which is kind of the official, unofficial government account, is getting more aggressive in tone a little bit. And we have the Taiwan issues and just a lot of accusations flying back and forth. So long term, I'm the opposite. It's party like it's 1999. Super excited. There's a Prince mode coming after this bad, deep, and long bear market. Check, we've got it. The expectation is for a strong bull market down the road. There's just no way to know when that is going to happen. But almost every experienced Canslim investor that talks about it, long-term perspective, would be very positive. Does that mean they commit money now? No, but it means they're ready and doing all the homework for when the good times do get here. So action plan now, not doing anything at scale on the long side, either not trading or pilot positions seems right for Canslim growth stock investors. And monitor for sell signals if you own ALGM, Legro, or ANET or something similar. And if the market has slammed us into after school detention hall, then make it a study hall. During the prior markets, Bill had his PMs do massive research projects, build model books, study, that sort of thing. You don't sit around and twiddle your thumbs. You're just not on the buy button. So what should you do? Here's a list of things. Join an IBD meetup group. Go to monthly, or some of them are bi-weekly meetings. It could be mine at the Stockyard, could be Alex Marinko's, could be Roy's in Charlotte, or it could be John in Boston's. And I'll give you links to all of these underneath this video on YouTube. read or reread books. How to Make Monies in Stocks, Reminiscences, Darvis, The Perfect Speculator. Pick one. Those are all great books. Go deeper. Maybe pay for a graduate class. We got the Trader Line IPO class now. John's group has one coming up on viable gap ups. You got Crusoe Insights. So there's a lot out there. And sign up for a service that meets online. Um, Matt Caruso has one. That's the one I do. Jim Ropel, Minervini, or other U.S. investing champions, top performers. Not all the guys that tell you you're going to make a ton of money in 30 minutes a week. Don't sign up for any of those. So it's baby steps is the bottom line. So take that list. Probably should have numbered these and figure out where you are on the list currently and go to the next level. Especially these, the first three basically are free. Well, you have a little bit, you got to pay for the book and you have to pay a little bit for these monthly meetings, but no big outlay at all. And then you're laying out more money if you get to 4 or 5. But that's tuition. You can pay your tuition to the market or you can pay it to a good teacher. Take your pick. So again, Bill Murray, one of my favorite movies. What About Bob with Leo Dreyfus? It's just great. So always, always, always do the weekend work and routine. It's time now for patience and discipline until we see some more improvement in the M and good setups. And right now, things are a little bit switched because actually I'm seeing some good setups. We're just missing the M. So usually when the M's this week, we're lacking setups also, and then the M improves and then the setups start really popping up, or we're showing up near the end of that. This time I've got the good setups, but really missing the M and seeing a lot of headwinds for the M. So let's go back to MarketSmith and just look at a couple lists real quick. So these 4, I think, are the leaders, and most people that are teaching or talking about Canslim would agree with this. Allegro's been an absolutely star. It had actually 2 opportunities to get in after the follow-through day, and it's up 32% from the pivot and just, doing fine. Arista Networks, again, acting like a star, would have been viable on a 21-day pullback, or if you bought it, I don't think it stopped you out. ACLS has been performing well. Look at a weekly chart. Yep, what's that? 1, 2, 3, 4, 5, 6, 7, 8, 9, up 9 of 10 weeks, 10 of 12 weeks in a row, showing some strength, showing some blue volume come in that climb here. Looks good. AEHR has been doing well, is consolidating. This is the one that has the risk of having a limited number or concentrated customers. I talked about that in detail at our meeting this week. So it's not one that I'm interested in entering, but I still want to see how it behaves. And then if we go to this list, just to look at some that are setting up, let's go to a daily. These all have great earnings and sales, triple digit on both. So actually this one has different buy points. So it's 4% from the pivot on the daily chart, but it's only 1% from the pivot on the weekly chart. So still within buy zone, good RS line. Hopefully it goes to new high with price. FTNT trading, pretty nice and tight there. Volume sort of consolidating, so looking good. MCHP could draw early entry, sloping trend line there on both the daily and weekly charts. LRCX semiconductor setting up. MPWR setting up again in the semiconductor, seeing a lot of strength in that area. OnCloud running, they report earnings this week, so maybe one worth keeping an eye on, see if there's a viable gap up. And Mobileye, watching to see if it sets up a base in here, recent IPO. So there are some setups, that's not all of them. There may be up to a dozen that are looking okay right now, so we won't pay attention to those. So reminders, EPS season, well, it's really wrapping up, but it's getting ready to start going again. So all starts over on April 1st. And again, we just Be great if the M could improve. Our monthly online meetings. So the next one's Wednesday, April 12th. Register at the Stockyard Meetup site. The monthly meetings are $12, but that includes live attendance, the recording, the slide deck, and then anything I talk about. I send out links to other webinars, articles that come up during the meeting. First timers get a courtesy copy of the prior month's meeting. So if you haven't gone, now's a great time to sign up for April, because you'll get a copy of this past Thursday's meeting. So that's very current, fresh information. Here's what we covered at that meeting. Of course, we looked at the M factor, went through about 10 teaching nuggets, reminders, everything from keeping records, portfolio manager, that sort of thing. Looked at some MarketSmith screens, talked about 24M technology and the short position in Fryer battery. Looked at viable gap ups, particularly Axon that happened after the prior meeting. And then we walked through Jim Ropel's Ride the Wave, sorry, not WSR, planned weekend routine, looked at the group teaching portfolio, mentioned a couple IPOs, and did stocks that anybody asked about. So prior meetings are available. If you don't have a set of written sell rules, now's a good time during a bad market to work on those. I spent 3 months teaching that, as well as a complete weekend routine in September and October. So spent 2 months, really one full month covering that with some follow-up. If you're interested in those, you can send me an email. I'll send you the list and how to order those. Meetup websites to join. Greenville East Side is the one I run with IBD, and of course the Stockyard is the one only for online meetings. You can follow me on Twitter, see the coloring book each day if you want to. Also, the whole spreadsheet's on the East Side IBD meetup site, and then you're on my YouTube page, The Stockyard by Greg Morton. And so there's some videos on there, teaching on the group teaching portfolio. There's a video on the 8-week hold rule, which is really the 8-week hold exception. So some things to study there. So get back in the classroom, get back in the books, do your weekend routine. We have a very interesting week ahead, particularly with the Fed press conference. Results come out at 2 p.m. Wednesday, and then the press conference is at 2:30. So that's it. I'm out of here. Y'all have a good one.